I'm Sarah Borkson-Keeter with NAREIT'sREIT.com, and I'm here in New York City for REITWeek 2016, NAREIT's Investor Forum. I'm joined today by Scott Craig, Vice President and Portfolio Manager at Eaton Vance Management. Welcome, Scott.
Thank you.
Do you think the Fed's anticipated action on interest rates later this year will have much impact on REIT stocks?
I don't. Real estate's a long-duration asset class, and long-term interest rates are much more important for real estate valuations than whatever the Fed does with the short end of the curve. I checked last week, and the forward yield curve implies today that 5 years from now, the 10-year U.S. Treasury rate will be less than 2.5%. That's a very supportive environment for real estate.
And what are your thoughts about regional shopping centers in light of recent weakness among department stores?
The department stores have been share donors for more than 20 years, and they've been losing share to all kinds of other retailers, but that's been a very tough place to be. You have seen some department store closures. The A malls have been quite successful backfilling those department stores that have left and thriving in spite of that department store weakness. You've seen people like Dick's Sporting Goods or the fast fashion retailers or restaurants and entertainment coming into the malls to replace those departing anchors, and so the A malls have really thrived. It's been much tougher in the B and C mall space, and one really interesting conversation I had recently at the ICSC convention in Las Vegas was with the head of National Retail Sales Brokerage at one of the big brokerage firms. He told me that it's very easy to sell A malls right now. It's very, very tough to sell B malls. Last year, 90 B malls were listed and only 10 of those traded. Interestingly, it's really easy to sell C and D malls right now because they sell at a cheap price, often less than $20 million, and they're often destined for a use other than retail.
So Scott, your fund has a large weighting in the apartment sector. Are you worried about increased supply?
Well, supply is clearly a short-term headwind for the apartment space. But in the long term, we still really believe in rental housing. We think the demographics and lifestyle issues are quite favorable for rental housing, and we think this is a great opportunity to add to positions.
Great. Well, thank you very much, Scott.
Thank you.
And for more news and information about REITweek 2016, be sure to visit REIT.com.